NVIDIA had a 10-to-1 stock split that took place today. Took them like 25 years to become a $1 trillion company, 9 months to become a $2 trillion company, and then just 2 months to go to $3 trillion. So they've been on a run on their market cap because of AI.
Get ready for a new episode of KP Talks Dollars and Cents. Learn financial literacy and get real-time updates on all things housing, finance, and real estate. So let's get started. Here's your host, Kevin Perenio.
Hey, it's KP coming to you live from Santa Barbara. We're here at the Mortgage Bankers Association's chairman event, and I just had dinner and a great event, band and stuff last night, and there's a lot going on, talking about trigger lead reform. So over 50 people have signed on. They're trying to get it tagged to this appropriation bill that's going through right now. It is a military bill, so it should get the spending approved. So any riders tagged along with this bill should go through. We're here at a resort. I got here late because yesterday I was with the good folks at PennyMac at their third annual Stan L. Kurland Memorial Golf event. That was this morning, and then an auction last night. They are raising money for glioblastoma. PennyMac is fantastic lender, huge servicer, multiple channels. Year ago, they were the number one lender in Q1 of 23. Great partner of ours at PRMG and many in the industry. And their founder died of brain cancer. And Stan Kurland goes back to the Countrywide days. His widow was there, family. There are some other people fighting brain cancer right now that were there. Really awesome event. So was there last night today, and then hauled up here to Santa Barbara to go be with the Mortgage Bankers Association. It's a very busy week. There's a lot going on. We're talking about GSE reform, AI in our business. There's going to be some NAR settlement update stuff. These are all the sessions tomorrow in the morning. And, just a great group here from the MBA, well-run organization and awesome event. This is where they had a band earlier in here. It's like 10, just after 10 on the West Coast. So they had a reception here, had some food. I'll give you a little view. Try and run around and not get too noisy, although this is a resort. There's other people here. So huge week, obviously, for economic data. We've got the Fed speaking on Wednesday. Their meetings start tomorrow, Tuesday, which, of course, they have the Consumer Price Index, CPI. They probably have that report, which comes out Wednesday publicly. There you go, a little moonlight. There it is back there. Very pretty here, this place. They have their press conference with Fed Chair Powell on Wednesday, and on that morning is the CPI print and report. Earnings season ends this week for Q1, and then next week we'll start to get to Q2. First week of July. You'll get the financials usually come out first and have their reporting the first week of July for Q2 earnings. NVIDIA had a 10-to-1 stock split that took place today. Took them like 25 years to become a $1 trillion company, 9 months to become a $2 trillion company, and then just 2 months to go to $3 trillion. So they've been on a run on their market cap because of AI. AI is being, fueled by all the big, magnificent seven, Apple, Google, Amazon, Microsoft, NVIDIA, Tesla is filled with AI. And speaking of Apple, they're the $3 trillion company not in the AI room, and they finally had their big developer conference today where now I have an Android. I'm not a hater. I'm not an iPhone guy. However, for all of you who have an iPhone, you should do the update. They have a new iOS, I think iOS 18, their new operating system. And Siri will be equipped with OpenAI's ChatGPT. So you don't have to open up a ChatGPT account. It'll be right on your phone. So it's pretty cool to see some of the things. There's some other things that Apple did as well. A big announcement today. So AI keeps pressing forward. NVIDIA keeps making a ton of money. Will they make it to $4 trillion? Who knows in market cap. Any GameStop traders out there? Roaring Kitty came out, pumped that stock, and became a billionaire last week. But I digress. We won't talk about that. Okay, Bank of Japan has a decision this week, which, European Central Bank has cut. Canada has cut. Next week, Bank of England will have their meeting. and the Fed has their meeting this week. All these countries and central banks, they all work together. I mean, there's a little bit of like, oh, what's inflation doing and what's employment doing? But, we can't have too strong of a dollar. So if we keep our rates elevated for an extended period of time, it is a problem. So the other banks are starting to cut. We've already started to reduce our run-up on our balance sheet, which is like easing. So the next move for the Fed should be a cut, and we'll see what they say with their dot plot, the summary of economic projections, aka the dot plot. It is coming out on this meeting. Remember, every other Fed meeting they put on the dot plot where they think everything's going to be. So that's very important as well. So lots going on. I did read some update about the NAR settlement, which is interesting, from the Department of Justice last week, and I want to make sure I got that out. There is another case, a follow-up case to that Burnett Sitzer case, where they made a statement saying, obviously they don't want commission requirements being posted anywhere on the MLS, but they also said it shouldn't be anywhere. And that's an official statement on another case that has some time to work its way through the system. But the DOJ, Department of Justice, is basically saying to everyone, warning, hello, you can't say what the commission will be on any deal anywhere. It's not limited to just the multiple listing service, the MLS. So that's a very important clarification. That July 1st date's moved back to August for implementation of the new NAR stuff. And the ratification of that plan isn't even until, I believe, October or November. So it'd be good to get another update tomorrow here with this great all-star panel we have at the NBA on, the fallout from the NAR settlement. Anyway, lots going on. Hope you guys are having a great month. It's very busy. Locks are up from last month, so June funding should be good. And we'll just keep on grinding through, and I'll get another update. I'll probably wait until after all the reports come out this week, CPI and PPI. So hopefully by Thursday. All right, have a great one. Cheers. Hey, it's KP coming to you live from Dana Point. I had a couple meetings here at the IMN non-QM event. Didn't attend the event. I guess this is what they call suitcasing. But I'm the client, I guess. So had some meetings, come out here and check it out. My third conference in 4 days, wrapping up this crazy week. And the view is actually pretty good. So stick with me if you like some good scenery. All right. The Fed hath spoken and the dots are out. So I think my takeaway is the Fed statement at the beginning said, we have seen a lack of, scratch that, we have seen modest progress towards the committee's 2% inflation target. So that was the difference. That was the big difference in the Fed statement. By the way, check this out. If you've never been to the Waldorf Astoria and Dana Point, it's pretty awesome. Look at all these dudes in suits up there. Anyway, so inflation improved, and the Fed made note of it. They said modest inflation, and boom, 10-year Treasury has legged down. Jobs report was, it's a little hot, but, we had jobless claims this morning that were a little bit weak, and we have softening in the labor market. In fact, Chair Powell in his Q&A even said that the labor market has softened and is at a spot that he would say he would compare to pre-COVID. And so they're still looking at the inflation target, which is coming down. They're at 3.4% core CPI yesterday versus 3.6% core CPI just 1 month prior. So what was interesting is the dot plot basically extended out the inflation target and the Fed funds target up to 2.8% from 2.6. Let me explain that. So currently the Fed funds rate is at 5.25 to 5.5%. After all the cuts are done, where we will end up, the rate that they put at the end, which I guess is your terminal rate, is up to 2.8. That means the Fed funds rate would be at 2.8 once they're done cutting in a couple years. And that's up from 2.6. And that's an indictment that inflation's here to stay, that we need to keep rates higher for longer, forever, whatever. And that part of the statement actually poured a little bit of cold water on the CPI print. So the consumer price index number came out in the morning, and the bond market rallied like crazy. The stock market rallied. I got sideways on a short position that I, just to hedge against a little trader account I have, but whatever. And then after the statement came out later in the afternoon from the Fed, bonds got worse. Interest rates for mortgage universe got worse. So then this morning, the PPI, the producer price index, came out, and mortgage interest rate universe got better because it was flat, 0% change month over month for the producer price index. Now, the other side, the bearish other side of why CPI and PPI were good is that oil prices have come down quite significantly, and oil and gas prices for consumers and producers in the CPI and the PPI showed that in the May CPI and May PPI. But now oil is going back up. So does that mean that whatever benefit we got from lower input costs will get worse again in the next CPI and PPI? I don't know. But what was interesting is the CPI was 0.163. And if you multiply that by 12, it's actually under 2%. I think it's 1.965 or something like that, if my memory serves correct. So that's under the 2% target. So it's very interesting, to see that all play out. So anyway, stock market is ripping, rallying. Sure loves the fact that there's less inflation. Our interest rates have gotten better. Lock pipelines are up this week. We're in a good spot considering that it's June. And this time 2 years ago was like brutal. We had seen interest rates go from the lowest in the history of history in February of 22, very quickly, rapidly rising to June 2022. Well, this June, 2 years later, rates are decent. They're steady. There's a lot less competition, a lot less originators, lenders, and realtors in the business. And where we are with rates, the Fed seems to think that, they're doing their part to stave off inflation on the shelter side of inflation. And they said that demand is down because they've held rates high. And so they're watching. They think the offset is rent. And I saw a report this week that in the top 30 MSAs in America, it is cheaper to rent now on new leases than to buy. Well, of course, rates are higher. So that offset with rental will take away from demand of housing, which should help. And of course, they mentioned in the Fed press conference the rate lock-in effect, keeping, existing homeowners from selling because they don't want to pay a higher rate for a higher price house when they're locked into a low interest rate mortgage. It's not enough. It's not that there's no lock-in effect. There's something there. And if it's enough to be at 4 million existing home sales per year instead of 5 million, that's pretty significant. So the Fed feels like they're winning that battle, albeit slowly. Auto insurance finally came back down to earth on a month-to-month basis. And our last reading on car sales was an annualized car sale of 16 million units. So if there's more cars being sold, then that means there's more insurance policies being put out there. And that means potentially lower insurance for all of us writing new policies. So we'll see how that shakes out. But so far, so good. The rest of the year, the Fed didn't say there's going to be much progress on inflation. So, if you go from 3.4 to 2.8 by the end of the year, I mean, that's kind of where they see it. 4.1% unemployment rate is their target by the end of the year. We just saw, 4% on the last reading. So the dots only call for one rate cut, basically one rate cut this year. Many people think it's in September. It's interesting. Manufacturing in the United States is mostly for creating things that are housing related, right? So housing construction creates about 4 jobs per unit. And then whatever manufacturing that goes on in America is mostly to manufacture things for housing, whether it's lumber or steel, maybe some appliances and some things that are made here and whatnot that aren't shipped from overseas. So, if the economy is going to have a steady growth rate and unemployment kind of stays where at, inflation kind of stays where at, and the economy gets used to interest rates where they are, then why would the Fed cut? Well, here's the reason why. Because all the other central banks are cutting. So next week, Bank of England speaks. That's a big one to see what they do with the gilt. That's their version of the Treasury. And we already saw Bank of Canada cut first. European Central Bank cuts second. And we shall see what England does. We can't keep our rates too high. So here, remember when they waited too long and inflation was transitory, and then we cut too aggressively, and now we're going to wait too long. Or so we raised too aggressively, now we're going to wait too long to cut. It all seems like it doesn't really jive with like what actually goes on with employment or inflation, because the Fed really cares about selling treasuries. So they care about funding our government, making sure the dollar isn't too strong to overwhelm our international trade partners and have this carry trade come in and hurt our economy. And so they really do care about that. They don't want to talk about that, though. But anyway, I digress. Okay. The Texas Stock Exchange. I'm from Texas. I think that's pretty cool. BlackRock and Citadel are talking about putting together the TXSE, the Texas Stock Exchange. There's the New York Stock Exchange, which is owned by ICE, Intercontinental Exchange, which also owns ICE Mortgage Technology, for those of us on Encompass and all the parts that they acquired from Black Knight. There's the NASDAQ. The CBOE is another one. It's about 12% of the market share. So what can the Texas Stock Exchange do? Be interesting to watch that play out. Anyway, earnings season starts the first week of July with all the financials, and see how that goes. Have a wonderful weekend, summer. My kids are out. God help us. God help you all, children. And let's keep grinding. Let's close some loans and put people in houses and foster the American dream. Cheers.
You've been listening to KP Talks Dollars and Cents, a top-rated show for those who want to learn about the economy and mortgage environment. Tune in each week for more episodes, and please leave us a 5-star review on Apple Podcasts and Spotify. Kevin Perenio does not render or offer to render personalized investment or tax advice through KP Talks Dollars and Cents. The information provided is for informational purposes only and does not constitute financial, tax, investment, or legal advice. For more info, follow KP Talks Dollars and Cents on all of our social channels.